Hello and welcome. The team at Pro Tax Accountant has put together this guide to tackle what is, let's be honest, one of the most stressful parts of running a business in the UK, corporation tax. We're going to forget all the jargon and confusion and just make this simple. So, you've started your business, things are going great, and then that first official-looking letter from HMRC lands on your doormat. If you felt this little wave of confusion, maybe even a bit of panic, I'm here to tell you you are absolutely not alone. It's a completely normal feeling for new company directors. And here's a number that shows you why that feeling is so common. £14.7 billion. That's the estimated tax gap for small businesses in the UK, the amount of tax that was due but wasn't collected. Now, this isn't all about people dodging their taxes. A huge chunk of this is down to genuine mistakes, which just goes to show how easy it is to get things wrong. But don't worry, we're here to fix that. Today, we're going to break it all down into 6 clear parts. We'll start with what corporation tax actually is. Then we'll get into those all-important deadlines, figure out how much you might owe, and of course, cover how to avoid those scary penalties and manage your tax in a smart way. By the end, you'll have a clear roadmap.
Okay, first things first. What exactly is corporation tax? Let's piece this puzzle together, starting with the absolute basics.
To put it simply, it's the tax that companies pay on their profits. That includes the money you make from your day-to-day business, any investments your company might have, and profits you make from selling things like property or big bits of equipment. And here's the crucial bit. Unlike personal income tax, there's no tax-free allowance for companies. The moment your company makes even £1 of profit, tax is due on it.
And you know, this isn't just for the huge multinational corporations. It applies to a massive range of organizations. If you've set up your own limited company, this is for you. It even covers some clubs and community groups. So let's picture someone, say, Chloe, a freelance graphic designer in London. The second she decides to incorporate her business and become Chloe Designs Limited, boom, she's now responsible for this. Right, let's get to the part that trips almost everyone up, the deadlines. Honestly, this is the #1 source of confusion and stress for business owners, so let's make it crystal clear. Now, what's so weird about this is the timing. You see, you actually have to pay your tax bill before you officially have to file the paperwork that shows HMRC how you worked it all out. Your payment is due 9 months and 1 day after your company's year end, but the actual form, the CT600, isn't due until a full year later. This mismatch is the biggest trap of all. Let's make this real with our designer, Chloe. Let's say her company's financial year ends on March 31st, 2026. She needs to have the cash ready to pay her tax bill by New Year's Day, 2027. Then she gets another 3 months until March 31st, 2027 to get that official return filed. See how that works? And here's the pro tip. You absolutely cannot wait for that 12-month filing deadline to get your numbers sorted. Think about it. To know how much money to send HMRC for the payment deadline, you have to have already done most of the work for your tax return. So don't let that later date fool you into delaying. Okay, so you've got the dates firmly in your calendar. The next massive question is, how much money are we actually talking about here? Let's dive into the numbers for the 2025/26 tax year. How much you pay is tied directly to your company's profits. If your profits are £50,000 or less, you pay the small profits rate, which is 19%. If you're making over £250,000, you'll pay the main rate of 25%. But what on earth happens in that middle bit? Stay with me. This next part about marginal relief is really important. Marginal relief is basically a way to stop a sudden, painful jump in tax for businesses that are growing. It just means that if your profit is, say, £100,000, you don't suddenly leap to paying 25% on everything. Instead, the system calculates an effective rate for you that's somewhere in between. It's a gradual slope, not a cliff edge. And of course, you only pay tax on your profit. That's your income minus all your allowable running costs. This is exactly why keeping good records is so important. Every legitimate business expense you track, from salaries to software, rent to stationery, directly reduces your taxable profit, which lowers your final tax bill. Just always remember HMRC's golden rule. The cost has to be wholly and exclusively for the business. All right, we know the rules. We know how to do the math. But what happens if you miss those dates or get the numbers wrong? That's not all. Here's where things can get really expensive really fast. Let's circle back to that huge tax gap for a second.
HMRC's own data on this is really telling. Failure to take reasonable care and genuine errors together make up almost half of all the missing tax. So it's not mostly about deliberate evasion, it's often just honest mistakes made by busy people trying to run their businesses.
And it's no surprise people make these mistakes, is it? A recent report found that more than a quarter of small business owners feel the system is just way too complicated. They said that simplifying it would be the single most helpful thing the government could do to support them. So if you miss that payment deadline, the first thing that hits you is interest. HMRC starts charging you interest on what you owe from the very first day it's late. And that interest racks up daily, so the longer it's left, the bigger the problem becomes. And that's just for paying late. If you file your actual tax return late, a whole different set of penalties kicks in, and they build up fast. You get an instant £100 fine for being just 1 day late. After 3 months, they add another 100. Hit 6 months, and they add a charge of 10% of the tax you owe. These things all stack up on top of each other. It is a ladder you really do not want to start climbing.
Okay, that's the scary part over with. So how do you actually avoid all these pitfalls and stay in complete control? Let's switch gears and look at the solutions, the smart, stress-free way to manage your corporation tax.
The single best thing you can do is be proactive. Don't just wait for the bill to land. As soon as your business starts making a profit, open a separate savings account and start squirreling away a percentage of your income just for tax. A good rule of thumb is about 20 to 25%. That way, when the deadline rolls around, the money is just sitting there waiting. No nasty surprises. And here's a quick but really important did you know for you. Keeping all your financial records, your invoices, receipts, bank statements, it isn't just good advice, it's the law. HMRC can ask to see your records for up to 6 years after the accounting period has ended, so you've got to keep them safe and organized.
And it's so important to remember that the tax system isn't just about taking your money. It also offers some really powerful incentives. The government uses tax reliefs to encourage businesses to invest and innovate. Things like R&D tax credits for tech projects or the annual investment allowance for new equipment can make a huge difference to your bill, so they are always worth looking into.
Wow, we have covered a lot of ground today. We've gone from the absolute basics and those tricky deadlines through the calculations and penalties all the way to smart management and tax reliefs. So, what's the big takeaway from all this?
You know, even after breaking it all down, it's completely understandable if this still feels like a massive headache to deal with. For someone like our designer Chloe, her focus really needs to be on creating amazing work for her clients, not staying up late worrying if she's calculated her marginal relief correctly.
And that's the crucial point. Getting professional help from an accountant isn't just another business expense. It's a strategic investment. It's an investment in being compliant, making sure you don't get hit with penalties. It's an investment in being efficient, making sure you claim every single relief you're entitled to. And really, it's an investment in your own peace of mind.
So if you want to take all the stress out of corporation tax and have the confidence that you're getting it 100% right, the best next step is to talk to an expert. The friendly and knowledgeable team at ProTax Accountant are ready to help. You can reach them on WhatsApp or give them a call on 07985 689 912. Or you can just drop an email to info@protaxaccountant.co.uk. And for more clear, simple guides just like this one, make sure you subscribe to their YouTube channel. Thanks so much for watching.